Hello and good morning and welcome to Traders Next Door. I'm your host Edgar Katashabe and this is the latest scoop. So the question on everyone's mind right now is, does size matter? Because the Fed dropped a massive 50 basis point rate cut on us on Wednesday, and we are a little unsure what to do about it. This is the first rate cut that has happened in the last 4 years, and it is bigger than anticipated. So the question on everyone's mind is, what does this mean? Typically after rate cuts, 10 of the last 14, they typically lead to a recession, and particularly when they start with a 50 basis point cut. Is the Fed aware of something that we are not aware of? This has been the question. Are they behind that curve? Well, it would seem that a lot of the members in the July meeting were keen on doing rate cuts from then already, but for some reason held off until now. So the question was, does the Fed feel like they're behind rate cutting season? Is that the reason for the 50 to get ahead of the curve, or was this just a proactive way forward? Well, as soon as Powell took the stand, he was able to explain that no, the 50 basis point cut is more a proactive rather than a reactive way of making sure that they stay behind that curve. He is very confident with the data that they've seen thus far that they are on track to hit their 2% inflation target and that things are all well and good. And as you can see from how the market reacted when the 50 basis point count got announced, we saw immediate volatile bearish action on the dollar, and right on cue at 8:30 when Powell took the stand, we saw the dollar rally back. So it would appear like the market believes what Powell is saying. It would appear that things are, for now at the very least, on course to be all well and good, this being a more proactive rather than a reactive way of handling how things have been in the last little while. And some experts agree that had they gone for a 25 basis point cut now and then switched over to a 50 at the next meeting, that would have been perceived much worse than just getting a jump on it and just starting things right off the bat with a 50. The Central Bank of Canada, the ECB, the Bank of England have all started their rate cutting cycles. So it was about time for the US to follow suit and start theirs. So it would seem like the market is overall really pleased with the 50, as it was some of the bigger whales in the market were expecting and wanting a 50 basis point cut in any regard. So and this also shows how much influence Powell has over the Fed. From how he spoke about the decision-making process of how they came to this, a lot of the members were actually in favor of a 25 even now. But Powell was more in favor of the 50, and a 50 is what we got. So it shows that Powell has a lot of influence on the Fed. He's leading from the front, he's leading from the charge, and the other members are more than happy to follow his leadership. So it would seem that everything on Powell's side, his comments seem like we're on a steady ship. But the dollar does influence a lot of other commodities, indices and the like. So what can we expect to see after such an announcement? Well, typically after rate cutting season, gold tends to soar. So if you're the type of person who likes to invest long-term, gold might be what you're looking for. And if you're a trader, bullish action on gold is what is going to be the predominant trend for the foreseeable future. Similarly with indices, the NASDAQ and US 30, after rate cutting season, this is the type of trend that we would expect. So if you're a trader, that is something to look out for. The question now beckons is, okay, cool, this has happened now. What is next for the Fed? Well, the Fed said that they are still going to go with the data-dependent approach, getting things as they come, release by release, and making decisions on the fly. They do not have a preset or predetermined pathway. Some experts think this might be a mistake, but they seem confident that they still need a little bit more data to really solidify what rate cuts we're going to get in the future. They have scheduled 2 more rate cuts for this year. We're going to get one in November and in December, and they have schedule approximately 4 rate cuts for next year. How big those rate cuts are going to be are still left to be seen. And if they end up being the 6 that are expected, that also still has to be seen. But for now, that is the template moving forward. This data-dependent approach, however, is going to have its caveats. The next FOMC meeting is happening on the 7th of November, and something happening really soon before that, on the 5th of November, is the US elections. And with 2 very different candidates, with 2 very different economic influences, this is going to put the Fed in a bit of a tight situation if they don't have a plan for it, because it's unlikely that all the votes are going to be counted in the 2 days between those 2 events. Now, with Kamala Harris being the more dollar negative candidate between the 2, and the market pricing in for her to potentially win, this is going to have massive implications on the data after that event. So the Fed is going to have their work cut out for them. So this is the economic situation we find ourselves right now. It is going to be a very interesting next couple of months. But as a trader, gold and indices is where the big moves are going to happen. So if you're a trader who's looking on capitalizing on that, I suggest you get yourself a Vault Funder account. Use code FISA to get yourself 35% off and start making some massive profits on the volatility we're about to see in the coming months. I have been Edgar Katashabe. This has been Traders Next Door, and you have just heard the Daily Scoop.